Hello and welcome back to Explain the Charts. Today, March 30th, 2025, we're taking a look at XAUUSD, gold versus the US dollar. We will analyze recent market movements and discuss whether the current rally is sustainable, considering both news events and the chart data. Let's start with the news. Recent reports indicate that gold has been gaining bullish momentum, surging to new record highs, driven by concerns about a deepening global trade war. Specifically, the potential implementation of auto tariffs by the U.S., set to take effect around April 2nd, is creating economic uncertainty and pushing investors towards safe haven assets like gold. Now, let's switch to the chart and see how this news is reflected in the price action. Looking at the daily chart, we can see a significant uptrend that began in late November 2023, reaching new all-time highs recently. Notice the climb from around 2,000 to now over 3,000 in that time period. However, the most recent candles on the daily chart show a tightening range, possibly indicating indecision or consolidation at these elevated levels. This could be a sign that the market is taking a breather after the recent surge and that the prior trend may not be sustainable. To get a better understanding of what's happening in the short term, let's zoom into the 1-hour chart. Here, we can see more detail in the recent price action. There appears to be a series of higher highs and higher lows, reinforcing the bullish trend, but also increased volatility. Finally, let's examine the 15-minute chart for the very latest price action. We can see some choppy behavior, with rapid up and down movements, likely reflecting short-term reactions to news and market sentiment. The price is consolidating between $3,075 and $3,085, a key area to watch for a breakout or breakdown. Based on this analysis, we can see the news factors align and correlate with the chart data. The geopolitical factors are fueling investor demand, but it is also reaching short-term indecision levels. Let's recap some of the key takeaways. Important price levels to watch are the $3,050 as near-term support, and then the major psychological level of $3,000. On the upside, monitor for a breakout above $3,085, which could open the door to further gains. In the short term, the consolidation pattern suggests a 60% chance of a breakout above $3,085 if risk aversion continues. However, if the market perceives a de-escalation in trade tensions, there's a 40% chance of a breakdown below the 3050 level, potentially leading to a test of the $3,000 support. Keep an eye on news headlines and upcoming economic data releases that could sway market sentiment. That's all for today's analysis on Explain the Charts. Happy trading!